they always have different causes. Now people are thinking about Greece, people are thinking about French banks or German banks, but at the end of the day, if you go back every 5 or 10 years, we have a volatile period like this. And the important thing for investors is not really to try to explain why these things happen. The most important things for investors is what to do about it. In the long term, markets will always go up. Eventually, it always happens. Of course, for many investors, eventually may be a little bit too late. In the short term, the sad truth is that nobody knows. If anybody tells you that they know what's going to happen next, never trust their money to them. Because at the end of the day, nobody knows what's going to happen next. The best answer to the question what's going to happen next is the answer that JP Morgan used to give, and that's basically that markets are going to fluctuate. And that's basically as much as we know. Now, in terms of what investors actually should do, is focusing on what they control instead of in what they cannot control. They control this strategy. They do not control what is going to happen next, and therefore the most important thing for them is to focus on what they control, which is their strategy, not on what they do not control, which is what's going to happen next. The tendency in periods like this is to try to do something, and sometimes the best policy is not doing anything at all. Now, of course, that is very difficult for investors to do. So this is one thing that investors could actually do. First and foremost, they should think about their asset allocation. They should take this period of very volatile returns to think about whether they have the nice breakdown between stocks, bonds, and alternative assets. And one way that they can actually do that is to think whether they're worrying too much about the market. The more they're worrying about the market, the more they're losing their sleep on the things that are going on every day, then the less risky is the portfolio they should have. Bottom line is that if you're focusing too much on what's going on day to day, then you should have a portfolio that is probably less risky than the actually you have today.